Hi guys, welcome back to my video. If you haven't watched the previous video, please do so before you proceed watching this video. So in this video, I will explain the theory lesson for the case of accounting for the collapse of DISME. Let's see theories, models and framework related with the case. So the first theory used is positive accounting theory. The second theory is normative accounting theory, and the third one, I use the framework which is AASB Conceptual framework. Next, the fourth is material statement, and the last but not least, APES 110 Code of Ethics. The first theory is positive and normative accounting theory. In general, positive accounting theory implies that the objective of accounting theory is to explain and foresee accounting activities. It aims to describe a process that employs accounting skill, understanding and knowledge, as well as the application of accounting principles that are best suited to coping with specific future situations. Positive accounting's pursuit for objectivity led it to establish some extremely subjective conditions for making assertions in the name of objectivity. Next, normative theory strives to explain accounting as it should be done. Its objective is to express how an organization or investor should behave. Apparently, one of the most difficult aspects of normative accounting is selecting which principles should be used in each particular case. When it comes to normative accounting, there is a significant risk that an accountant may choose a principle he likes and then adhere to that principle to the exclusion of all other considerations. This is the example of theory related to the case. When both the normative and positive accounting theories are taken into consideration, it becomes clear that the rule of security was not preserved by the stakeholder of DISME. The stakeholder had purposely concealed the significant variances and need of decision-making that were very important for the potential development of the company, and as a consequence, they had overlooked the importance of financial stability. As a result of this factor, the routine operation and procedure of the company were not adequately reflected in the financial statement, and the accounting process was conducted in accordance with incorrect accounting practice. This caused it extremely difficult for the company's management team to evaluate the company's financial situation. Next, we move to AASB Conceptual framework. AASB stands for Australian Accounting Standard Board. A conceptual framework can be defined as a system of ideas and objectives that lead to the creation of a consistent set of rules and standards. Some countries may have a distinct conceptual framework than others. For instance, in Australia, the AASB is applied, but in Malaysia, the MASB has been used. Although the substance of ideas may have a slightly different, but the fundamental concept of accounting always remains the same. AASB framework supports the auditors of an organization in forming a judgment on whether the financial statement of the organization comply or do not comply with AASB. Let's see how this framework relates with the case. As a result of applying this accounting standard, the auditor of the DISME may have examined the financial report as well as confirmed the issue of whether or not the accounting department is following the standard. The framework outlines the purpose of the financial statement and its qualitative aspect in order to judge the value of the information and also to enlighten the ideas of capital, which could have prevented the company from failure. Let us now look at the material statement. Materiality refers to the impact of an omission or misstatement of information in a company's financial statement on the user of those statements. If it is probable that user of the financial statement will have altered their action if the information had not been omitted or misstated, then the item is considered to be material. If user would not have altered their actions, then the omission or misstatement is said to be immaterial. The example of materiality related with the case is when the materiality is actually a crucial qualitative property of the dates made. Its auditor and accountant must pay special attention towards it. It is possible that the auditors would have been able to analyze better or uncover any improper or missing information in the company's financial report, thereby saving the company from going bankrupt. Let's move to APES 110 Code of Ethics. APES stands for Accounting Professional and Ethical Standard. This ethical code is a professional requirement for accountants that are based on 5 core principles, which are objectivity, integrity, professional competence, and due care in handling confidential information. While ethical or faithful representation indicates that the financial data in financial report should be free from mistake and without omissions, therefore, it does not imply that the information will be correct in all areas. There are 4 examples of code of ethics that can be related with the case. The first one is Dismiss should provide its information in its financial report in an ethical manner. Second is the business should refrain from misrepresenting its losses for the first 6 months of the year as a profit, because accurate representation helps to keep the company from crumbling. Third is Dismiss accountant should abide to APES 110, the Code of Ethics for Professional Accountant. It is crucial to avoid any mistake or inaccuracy in the financial reporting of the company. And the last one is, if the professional accountant at Dismiss had implemented and obeyed the APES 110 Code of Ethics, the company would not have faced the consequence of its collapse. Thank you guys for taking the time to watch this lesson, and I wish you the best of luck for answering the quiz. Bye bye.